Ginzo VI! Onegai shimasu! Hello everyone, welcome back to the channel. Today, as part of the Toolkit on Value Investing series, we're going to have a look at how we should be screening for value stocks. But before we actually jump into the app that I use for screening for value stocks, I want to talk to you about the filters that I use on those screening apps. Right, so when screening for value, first and foremost, I'm going to look at how financially healthy a company is. So we can look at their debt to equity ratio or their current ratio or even their quick ratio. But the general idea is to look for companies that are healthy, companies that do not have too much debt on their books. Then I'm going to be looking at growing businesses. Okay, so we can look at the sales growth in the last year, in the last 3 years, or in the last 5 years. We're also going to have a look at the track records of their EPS, their earnings per share, and also have a look at how their book value evolved over time. After that, I'm also going to look for performance in a company. So looking at ratios like return on equity, return on assets, or return on invested capital, and actually comparing those ratios with competing companies in their sectors. I'm also going to look for profitability in a company. I'm going to be looking at gross margins, operating margins, net profit margins, and again, make sure that they are within the industry standards and they actually are outperforming their peers in the industry. And then last but not least, I look for company size. I can look if I'm looking for small caps, medium caps, large caps, and so forth and so on. Okay. So let's start with the financially health of a company. So what I'm looking for in a company where I do my screening is companies that have the debt to equity ratio below 1 or below 100%. That means that they have at least $1 of debt or $1 of equity for each dollar of debt. I do not want companies that have more that debt than equity. But I also look for current ratio. Okay? And the standard I use is that the current ratio of a company should be higher than 1.5. Okay? That means that the company has enough current assets, cash or cash convertibles in their balance sheet to cover their current liabilities. And just to remind you guys, the current liabilities are the expenses that the company will have to have in the next 12 months. Next, when looking at business growth, I'm going to be looking at their sales growth in the last 5 years. Okay? So I'm going to be filtering companies that at least in the last 5 years had growth of more than 5%, or equal to 5%. I'm also going to look for companies with return on equity above 5%, and also in terms of profitability, companies that have a gross margin higher than 30%, operating margin larger than 25%, and net profit margin higher than 10%. Those are all profitable companies with big moats, competitive advantage. If a company is generating this level of margins, they definitely have any underlying competitive advantage against their competition in the industry. And last but not least, and this is my personal preference, I prefer to look for medium to large sized cap companies. So I'm not going to look for very small companies in my screenings. So just a summary of the filters we're going to use for our screener. So we're going to use a debt to equity lower than 1 or 100%, a current ratio higher than 1.5, return on equity higher than 5%. We're also going to look for businesses that have a past growth rate of 5 or more percent over the last 5 years. We'll be looking also for businesses with gross profit margins higher than 30%, operating margins higher than 25%, net profit margins higher than 10%. Pedantic a little bit here. And I'm also going to look only for companies with a market cap higher than 2 billion. Okay. So the screener that I use is Finviz. Okay, it's really good screener. It is free, so you can log in, and the screen filters will get saved for you. I think they do offer a premium option, but for me, I think using it just a free website, the free app is more than enough. So I highly recommend using Finviz. I've tried other screeners and they're not as powerful as this one, and they also don't provide as much information as this one does, as you will see. Okay, so let's go to the screener option. As you can see, they give you the ability to screen pretty much for anything that you can think of. Okay, so let's just start by, for example, setting here the option that we want in terms of company size. So we're going to be looking at companies that are over 2 billion. Okay, so as you can see, it automatically refreshes. Oh, by the way, so this app only works for the US market. Okay, unfortunately, you're only able to see companies within the US exchanges, right? You would have to use another screener for companies outside of the US. I'll probably be doing a video later with screening for non-US market stocks. Okay, for the time being, I mostly invest in the US market anyway, and I'm guessing most of you do also that. But anyway, if you guys want to look for stocks outside of the US, let me know in the comments below, and I'll try to do a video on using other set of tools to screen for non-US stocks. Okay, all right, so mid-cap, then we go to this tab here called fundamentals, and there's a lot of options here. So let's start by setting the debt to equity low under 1. That's what we set, 100% lower than 1. Let's also set the return on equity over 5%, right? So just following the filters that we had defined initially. Let's also set the sales growth over the last 5 years to over 5%. And as you can see here, from thousands of stocks available, we're now down to only 450. All right, let's keep on doing this. So I want companies now that have gross margins over 30%, operating margins over 25%, and net profit margins over 10%, right? And then last but not least, I want to make sure that the company has a current ratio of over 1.5. All right, okay, so from our initial 3,000, 4,000, whatever it was, can't remember, we're now down to 108. Okay. Okay, so The next thing, as you can see here, this is the results of the filter, okay? So one other thing that you can do within Finviz is to set the custom output fields, okay? So as you can see here, the output of your filter, of your screening, gives you the company name, sector, industry, country, market cap, and so forth and so on, okay? I want to see more information. So I like to see, for example, I want to see the growth, all the filters that I selected, return on equity, the current ratio. I also want to see the payout ratio, for example, to see if they are paying dividends. I want to see the total debt to equity, the gross margin, the operating margin, the net profit, and as you see, as I add all these fields, they show up here, and you will see in a minute how those fields are going to be very, very useful for us. Okay, so let's go back. So yeah, you can kind of click here on the settings and decide any additional field that you want to look for. Okay. So let's get this into the filters. So those are all the filters that we chose. We have 108 companies, and we have all the information that we need to start looking for the companies we want to then have special analysis. Excuse me. Okay, all right. So once I do this and I have the list of companies, what I like to do is start looking at sectors, okay? So kind of basically filtering, not really filtering, but kind of separating those 108 companies into their individual sectors, okay? And what I do, let's start with the basic materials, for example. As you can see here, based on my filters, based on the filters we used, we only get 2 companies on that sector, okay? Now that may be enough for you, that may not be enough for you, it depends. I prefer to have a higher number of companies to evaluate, to kind of give me an idea on how the industry or how the sector is performing, okay? So sometimes what I do is, well, first of all, before we jump into this, just to let you know that setting back to the totality of the screen companies, this Finviz also gives you the ability to save your filters. In this case, I have already saved one, so I've already saved this. If I say I can try to save it again, Kinsu 2, for example, save changes, right? And the next time that I log in, I can come here and just select the screen, and it kind of gives me the result automatically, okay? So once you have this saved, I can then kind of start separating them into sectors. Now, as I said, I like to have at least a handful of companies per sector, if at all possible. So what I do is that I start to relax my requirements up to a limit. So for example, I may now, if I want to increase the number of companies in this sector to have something to work with, not just the 2, I can come over here and say, you know what, I'm willing to kind of say, all right, as long as it has positive return on equity, fair enough. As you can see there, as soon as I changed that, one additional company showed up. Okay, and I can keep on doing this until I get to the number of companies that I feel comfortable with. So in this case, I'm going to say, you know what, all right, for this sector, 5% year on year, especially last year because of the coronavirus. Maybe this filter doesn't make a lot of sense. Nevertheless, I do want companies that in the last 5 years had positive growth. So I increased this. I changed the filter, sorry, to higher than 0%. So positive growth in the last 5 years. So I get to 6, right? Now, in this case, this is enough for me. This gives me enough to work with. I have I have 6 companies which have positive sales growth in the last 5 years, positive return on equity, gross margins higher than 30%, and so forth and so on. So all the other filters that I had selected. Now, you can quickly see here that I have 3 companies in the gold industry and then 3 on the chemical. Okay, and I mean that's fine with me. I'm not going to separate them into individual industry at this moment in time. I'm okay with sector, and I'm okay with the filters and with the accommodations that I had to do on my filters. So what I do now, it's if you have a professional account, you can actually export this straight away to Excel. If you do not have a professional account, but you do want to export it, you can simply copy and paste this into an Excel spreadsheet, and then kind of copy to the final location where you wanna keep this information. And that brings me to my spreadsheet. So what I do is that in sector by sector, I start copying the files, the outcome, sorry, not the files, the companies, the outcome of my screen filters to spreadsheets where I've created a set of tabs. Each tab is a sector, and basically what I've done was this exercise. Once I have my primary screen, I then go sector by sector, adjust it if I need at least 5 or 6 companies for that sector, and then copy all the companies from that sector into my spreadsheet. Okay, so this is the basic materials. As you can see, slightly higher than 6 stocks. I currently have 9 stocks. I think I played a little bit more with the filters. I think I reduced the growth margins. No, I think, well, I did something because I copied them here, but anyway, as you can see here, all the companies in my lists have growth, sales growth higher than 0. They have return on equity higher than 0 also. And they also have growth margins, operating margins, and profit margins within that range of values that we define. Okay, so what I've done in this spreadsheet, and by the way, the spreadsheet will be available for you guys. I'm gonna put a link in the description below with a link to this file. So feel free to download it. Feel free to use it. What I've done here was pretty much copy paste all that information from the stock screener from Finviz into the spreadsheet, and then I created a row here that gives me the average around each one of those variables. So I have the average PE for these 10 companies is 18.42. The average on sales growth for these 10 companies is 6.9, and so forth and so on. And what I've done then was I created some coloring to show the ones that are below or above, depending on the variable, of that medium value or the average. So it kind of gives me a very, very quick visual cue on which companies are outperforming their peers, right, in this group of companies. So as you can see here, these top 5 companies, except the first one, which has a PE of 0, something to look at with more carefully. But the other 4 companies have PE ratios which are below the average of these 10 companies. So you could think of them as being cheaper than the average on this set of companies. And the same thing for sales growth, return on equity, and so forth and so on. So the ones you see here in growth, in the sales growth column, are companies which have had sales growth in the last 5 years above the average. Same thing with return on equity in green, the ones above the average. And the same thing with gross margin, operating margin, and profit margin. Right? And I do this for each single industry. Okay, each single sector. Okay, and as you can clearly see, you can very quickly spot companies that are you should look at with a special care, right? So this company Copart, which I don't know about, never heard of them. Maybe you have. Put a comment in the video below if you know about this company, and give me your thoughts on it. But just something that immediately pops up in the screen is that Copart he's green in all across the board. Okay, so he has higher sales growth than the average, higher return on equity than the average, higher gross margin, higher operating margin, high profit margin. It also has a higher PE ratio than the average, even though for me 36 is still high. If based on the historical average of 25 P ratio, 36 is quite high. But anyway, that would be a stock that I'll probably be looking at if I wanted to kind of cherry pick some stocks in the industrial sector to look at. Okay, and you can do that across all sectors. So you can immediately see whenever there's a row where you have a lot of green, this is probably a company that you want to look for. Some of these companies I'm going to do some analysis and valuation in upcoming videos. If there is any particular stock or company that you are interested in a evaluation video, let me know in the description below. I'll try to do one stock per week as soon as this series of videos on the Toolkit are over. Okay, that's the plan anyway. I already have a set of companies that I'm going to analyze, I'm going to try to analyze one company per week. But if there's any company in particular that you want me to analyze, tell me in the comments below, and I'll try my best to come up with the valuations that you guys want to see. Okay. All right. So once I have all this laid out, then this part of the work is done. I do update those lists on a quarterly basis, maybe twice every year. That information doesn't change that much because most of it is based on the annual reports or quarterly reports. I'm not sure if they are trailing 12 months. I think they're not. But I try to keep these lists updated regularly. But I don't think it needs to be refreshed every month. I think every quarter. I would say even every throughout the year, mid-year, and then at the end of the year, or mind you, at the beginning of the year, once the annual reports, most of the annual reports are out. Okay, so I hope this was useful for you. Just as a summary, the tool I use for screening for stocks is this FinViz. Really good tool. Gives you a lot of filters, and I particularly like the fact that you can select the information that you want to export. Okay, I will leave a link below with a link to this app. Feel free to use my link below. That would be very appreciated. And I'm also going to leave a link for you guys to download these spreadsheets, as it is, right? So you get all these data already for free, all the coloring already done, so you don't pretty much need to do anything. This was done in actually this month, March 2021. So it's updated I would say until mid this year. I'll try to keep it updated at least twice a year. So feel free to use it, feel free to download it. I hope you enjoy the video. I hope you find this useful, and look out for those green lines here. That's companies that you should be looking at more carefully. Okay, thank you very much. Okay, I hope you liked the video on screening for value stocks. The next video on the series, we're going to have a look at the financials and do a financial analysis on one of the stocks that we screen for. I hope you like this type of information, and if it's something that you take value of, please give me a like. That will show me that there is people out there that gets value from my videos, and I'll keep on doing this type of videos. And if you want to be notified on the upcoming videos on the series, click the subscribe button and the bell icon, and you'll get a notification when I upload the next video. So thank you very much. See you soon. Stay safe. Kinzo vi! Arigatou gozaimashita!